So talking about chart patterns, we have a lot of them. We have the continuation chart patterns and the reversal chart patterns. And in this video, I'll be giving you a few examples of the both chart patterns, the reversal and the continuation chart patterns. I'll be giving you 2 examples each. All right, so let's dive into our charts and give examples of these patterns and how to spot entry on each of these patterns. All right, so this is our charts, and you can see here we have the reversal chart patterns, right? So there are a lot of them. These are just a few I picked out, but then I'll be talking about I'll be talking about these ones here, okay? But there are a lot of chart patterns, reversal chart patterns. All right, so but the ones you see most of the time are these ones I just listed out. We have the double top, the head and shoulders, the rising wedge, the double bottom, the inverse head and shoulders, and the falling wedge. Okay, so if you can see the double top, this is just the inverse. So this is the double bottom, this is the M pattern, and this is the W pattern. This is the head and shoulders pattern, and this is the inverse head and shoulders pattern. This is the rising wedge, and this is the falling wedge. All right, so let's talk about the double top first. So if you can see here, price was coming from it was an uptrend, right? It was an uptrend, and then price created an equal high. It created an equal high here. So this is the neckline, and this can also serve as a support level. All right, this is the support level. This is a support level right here, and this is a resistance level. So price created an equal high on this resistance level, and what you have to see next is what price will do around this area. When it comes to this area, what will price do around this area? If price breaks below it, closing with a bearish candle, if the candle closes below this place, we'll wait for a retest around this area here to take a trading entry. So this will be your entry. So you want to properly see that the price breaks below this support level to get your trade entry, to get an opportunity to either to sell the market to this point. So this one will give you the targets here. This will be your target. Your target will be the next support level after price breaks this previous support. So your next target will be the next support level, which is around this area. So I hope you understand the double top, and for the double bottom is just the inverse of this one. So you can say that this is also the neckline, and this is a support level, this is a resistance level. So what you'll be waiting for to see here is the break above this resistance level, retesting it, and then you get your entry around this area. So and your stop loss will be at this point. You put a stop loss at this point. Okay, so you either put a stop loss at this point or put it below this support level. So in case price comes back here, because sometimes price will definitely get drop further down before it goes bullish. Okay, so most traders will rather put their stop loss below this support level, just to let the market to breathe properly before it makes it move to the upside. So the next target will be the next resistance level, which is this point. Okay, so I hope you understand double top and double bottom. So for the head and shoulders, you can see that price was coming from the upside. It was an uptrend. Price came from the upside, created a new higher low, created a new higher high. So when it created a new higher high, it came back to retest the previous higher low, making it a support level, right? So when it created a new higher low, it came back here, failed to break above this previous higher high, right? Failed to break above this previous higher high, making this one a lower high, right? Making this one now a lower high, and also making the both of them equal. So this is the head, so sorry, this is the shoulders, these are the shoulders, this is the right shoulder, the left shoulder, right? So and this is the head. Okay, Okay, so what you want to see here is price breaking below this support level. Breaking below this support level, closing bearish, closing with a big bearish candle, you will get your entry around this place, and your target will be the next support level, which is around this area. Okay, so this is for the head and shoulders pattern. So when you come to the inverse head and shoulders pattern, you want to see that, you know, just opposite of this one. This is a downtrend. The market was coming to the downside. So this is why they call it a reversal pattern. It was going to the upside and then started reversing back to the downside. Alright, so that's why it's called a reversal pattern. So continuing with the inverse head and shoulders, this was a downtrend, right? Price came here, broke below this support level, came up, retested the support level, now making it a resistance level, right? Broke below this other support level here, creating the head, right? Now creating the head. Okay, so now price now came back up. It was supposed to come and retest this particular point because this is now the new resistance level, but it broke above this resistance level, retesting this other resistance level, right? Now after retesting this level, it came back down to also test this support level, because this is now a support level, right? So retesting the support level, you want to see that the market breaks above this particular point, this resistance level. You want to see market break above this resistance point, giving us a candlestick confirmation for us to go bullish. So our target to be the next resistance level. Okay, so I hope you understand the double top, the double bottom, head and shoulders, and the inverse head and shoulders. So for the rising wedge, you can always spot it in the market. So this was an uptrend. Market was going to the upside, started consolidating, going to the upside, and the candles are becoming smaller. And what you want to see here, you want to always mark your your trend line. So marking this your trend line and spotting this this pattern in the market. So what you want to see is that you want to see price break below this trend. You want to see price break below this trend, breaking below it, giving you a candlestick confirmation to sell, and your entry will be here, your stop loss will be above this place. So now your target will be the next support level. Okay, so now you can see that okay, so now your target will be the next support level. Okay, so I hope you understand this, and this is just the opposite of the falling wedge the rising wedge is the opposite of the falling wedge. So the falling wedge was a downtrend, market came back up, came back down, came up, and then you want to see a break above this particular point to get your entry here, ride it to the upside, buy to the upside. So this is a reversal pattern. All right, so that's why it's called a reversal pattern. So I hope you understand this. I hope you understand this. So okay, let's go to let's do further explanation. So this is for the reversal chart patterns. Let's go ahead and do the continuation chart pattern. So this is for the continuation chart pattern. So we have a lot of continuation chart patterns, but these are the few I've selected because these are the few that you always spot in the market. All right, so we have the bullish flag pattern, we have the bullish pennant pattern, the bullish falling wedge pattern. Also we have the bearish flag pattern, the bearish pennant pattern, and the bearish rising wedge pattern. So you see, bullish means buys, right? And bearish means sell. Bearish is for sales and bullish is for buys. All right, so it's a continuation chart pattern. So when you see when I was talking about trend lines yesterday, I told you about counter trend lines. All right, so this is more like a counter trend, market consolidating to the downside, like reversing to the downside before continuing its movement to the upside. Okay, so when you spot something like this in the market, you always want to draw your trend line from the points, to always put your confirmations, your confluence, put your confluence together to take a trade entry on the market. So this is more like a trend line and also a reversal. This is the reversal. This is an impulse move to the upside with a correction and a continuation to the upside, right? So this is for the bullish move for an uptrend, right? Also, this one is like okay, the pennant pattern, right? So when price comes here, the candles becomes smaller. It tends to become smaller. So what you want to see is a break out of this particular line, a break out of this line to get your confirmation for an entry. So you enter at this point and your stop loss should be below this level. You buy to the next resistance level at the top. Okay, so that's for the bullish pennant pattern. So this is the bullish falling wedge pattern. So when price comes up, because it's an uptrend, price keeps going to the downside, candles becoming smaller, and then you can mark out your the pattern, confirming that this is a bullish falling wedge pattern. So what you want to see here is a break above this line with your confirmation, your candlestick confirmation, then enter from this point, buying into the upside. Your stop loss should be below here and your take profit should be in the next resistance level. All right, so the same thing with the bearish flag pattern, just the opposite of the bullish flag pattern, right? So what you want to do here is to also mark out your line, confirming that this is a bearish flag pattern, right? So you want to see price after the impulse move, you want to see price correcting to the upside, creating this series of high and lows correction pattern, and then you want to see price break below this your line here, giving you a candlestick confirmation for sales to the downside to the next support level, right? Then your stop loss should be a little above this point. All right, so same thing with this point. When you see price come down here, create smaller candles retracing, marking out your line for confirmation that this is a bearish pennant pattern. So you want to see price break below this point with a candlestick confirmation as well for you to sell to the next support level, and your stop loss should also be at a little above the previous high. All right, so same thing with this bearish rising wedge pattern. You want to see price coming from the downside, making a series of retracement, candles getting smaller. You want to also see price breaking below this point, giving you a candlestick confirmation, and then you sell to the next support level. All right, and your stop loss should also be a little above the previous high, a little above this previous high. Okay, so if this either go, if it doesn't go this, if it doesn't sell this way, it will either break below here, giving you a reversal pattern. So this is if it goes up, rather, it means it's a reversal pattern. But if it breaks down to the downside, giving a confirmation to sell, it means it's a continuation pattern. So I hope you understand what chart patterns are, and there are a lot of them. All right, so in subsequent videos we'll be talking more about spotting these chart patterns on the charts, spotting these chart patterns on the charts to properly to use them for trade entries. All right, so I hope you understand, and please, if you don't understand, you can watch the video over again or ask me your questions in the comment section. All right, so thank you for watching, and then I'll catch you on the next video.